Hey everyone, welcome back to Corporate Decoder, the place where we dissect financial documents, and I have a doozy for you today. We are diving into LQR House Incorporated's latest quarterly report, and let me tell you, it is packed with some spicy developments, and yes, some really important numbers. Before we dive in, if you are tired of the jargon and want the real story behind companies, then make sure you are subscribed. And hey, we have a fantastic community over on our Discord server, linked in the description below, where we break down these reports together. So go ahead, smash that subscribe button and join the Discord. Alright, let's get straight into the financials for LQR House Incorporated. We are looking at their quarterly report for the period ending the 30th of September 2025. First off, look at the number of shares. They authorized a massive 350 million shares, and by the end of September 2025, they had over 14 million shares out there. That is a huge leap from the 435,000 shares they had at the end of 2024. This tells us they have been very busy issuing new stock, likely to raise money. Now let's look at the top line, the total revenue. For the 3 months ending the 30th of September 2025, the company brought in about $337,000. Now compare that to the same period in 2024 when they had over $624,000. That is a drop of about 46%. For the first 9 months of 2025, revenue was $1.26 million, down from $1.66 million in the same period of 2024. That's a 24% decrease. This means they are bringing in significantly less money than they were last year quarter over quarter and even over the 9-month period. And what about the profit they make from selling their products and services after accounting for the costs? Well, for the 3 months ending the 30th of September 2025, they actually turned a tiny profit of $12.32. That sounds good, right? But last year in the same period, they had a gross loss of over $62,000. So yes, an improvement, but still very small profits. For the 9-month period, they did have a gross profit of $115,000 compared to a gross loss of almost $294,000 in 2024. Again, an improvement, but the numbers are still quite small given the revenue. This suggests they are struggling to make a significant margin on their sales. Now let's talk about the big picture operational losses. For the 3 months ending the 30th of September 2025, the company lost over $3.8 million. That is a bit more than the $3.5 million loss they had in the same period of 2024. For the 9-month period, the loss from operations was over $8.4 million in 2025 compared to over $8.2 million in 24. So they are continuing to lose a lot of money running their day-to-day business. And then there is this very significant item. Legal settlement expense in the 3 months ending the 30th of September 2025, this expense was a whopping $13 million. This is a huge hit and completely dwarfs any other income or expense in that period. For the 9-month period, the total other expense including this settlement was also almost $13 million. This essentially means they had to pay out a massive amount of money to settle a legal case. Reading further into the notes, this was related to a lawsuit from Kingbird Ventures, LLC impacting corporate governance and other serious claims. They made a substantial initial payment and still owe over $5.5 million. This is a major event with a significant financial impact. So with all of this, it is no surprise that the net loss is substantial. For the 3 months ending the 30th of September 2025, the company reported a net loss of over $16.8 million. That is a massive increase from the $3.3 million net loss in the same period of 2024. For the 9-month period, the net loss in 2025 was over $21.4 million. That is a huge jump from the $8 million net loss in 2024. Essentially, they are losing more than 3 times more money in the first 9 months of 2025 compared to the same period last year. Let's look at their cash situation. As of the 30th of September 2025, they had over $10 million in cash and cash equivalents. This is a significant increase from the roughly $5.4 million they had at the end of 2024. This jump is likely a direct result of all those new shares they issued. They seem to have raised a lot of capital to keep the lights on. Looking at cash flow from operations for the first 9 months of 2025, the company used over $19.5 million. That is a huge negative number, meaning their operations are burning through cash very quickly. In the same period of 2024, they used over $3.5 million. So the cash burn from operations has also increased dramatically. Now this is an interesting one. Under investing activities, they spent $23 million on prepaid investments, up from $0 in the previous year. The report indicates these are for potential investments to expand the company's operations and growth potentially related to multi-channel network agency services and working with TikTok creators. However, these agreements were not finalized as of the 30th of September 2025, so they have spent a huge chunk of cash on something that is not yet a concrete investment. It is kind of like paying for a house before you even sign the purchase agreement. Financing activities tell a big part of the story here. In the first 9 months of 2025, they brought in over $43 million from issuing shares through their at-the-market or ATM program. They also got over $4 million from warrants being exercised, so they have been very successful in raising money through selling stock. Looking at the bigger picture, LQR House Inc. aims to be a marketing and brand development company in the alcohol industry. They offer marketing services, sell spirits like their own Swole tequila through their CWS platform, and are developing a wine club. They also have minority stakes in other beverage companies. The company acknowledges it is a smaller reporting company and is electing scaled disclosure. This means they don't have to reveal as much as larger companies. Crucially, the report states there have been no material changes in their risk factors previously disclosed in their annual report from March 2025. This suggests the existing risks are still very much in play. This is a critical point on controls and procedures. The company admits their disclosure controls and procedures were not effective as of the 30th of September 2025. They are saying their size has made it hard to have enough people and clear roles to properly oversee financial reporting. They have material weaknesses in internal controls. This is a red flag for investors because it means there is a higher chance of errors or even fraud. They are trying to fix it by bringing in new people with financial expertise, but it is not fully resolved yet. Now, for my take on all of this, LQR House Inc. is in a very challenging position. On one hand, they have shown they can raise significant capital through issuing stock, which is good for immediate liquidity. However, their actual business operations revenue is declining, and they are losing money at an alarming rate. The $13 million legal settlement is a huge setback and points to serious issues in how the company has been run or alleged to have been run. The prepaid investments are a gamble, and we will have to see if they pay off. The fact that they admit to ineffective internal controls is concerning. It suggests a lack of robust financial management, which is never a good sign for a public company. While they are bringing in new talent and trying to improve things, the core business performance, despite the influx of cash, is not impressive. They are essentially burning through investor money at a rapid pace with declining revenues. The future looks highly uncertain and dependent on new ventures paying off, and that enormous legal settlement is a heavy burden. So what is the verdict? LQR House Inc. is in a high risk, high reward situation, but right now the risks seem to heavily outweigh the rewards. They need to demonstrate a clear path to profitability and stronger operational execution to justify the continued investment. Alright, that is our deep dive into LQR House Incorporated's latest report. What do you think about these results and the company's direction? Let me know in the comments below. If you found this breakdown useful, give it a thumbs up and subscribe for more. And do not forget to join our Discord community linked in the description. Thanks for watching, and I will see you in the next video.